Well, welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Friday the 29th of November. Markets are pretty much dead flat, and they've been like that pretty much throughout yesterday's session and into today. We've got very little direction. It was Thanksgiving in the States yesterday, and you've got a funny little trading session today where bond markets are open in the morning and then they close early for a half day. So it's going to be a muted session once more, and I think that's pretty much reflected through how major markets are moving at the moment. Euro pretty much dead flat. Dollar yen doing very little, still hovering around that 109.50 point. Gold there or thereabouts flat, along with silver. A little bit of direction in silver, but nothing really of any note. Look at those equity markets. Flat again. S&P 500 futures were around about 0.3-ish% lower earlier today. They've just rebounded a little bit, and that's helped European markets to rebound back towards flat, but yeah, nothing really doing in terms of direction. Markets are still sort of focusing on how, let me just show you actually bond markets, 10-year yield a tick or two lower, as are the 2-year yields lower, but nothing really in terms of direction. And there's still a reaction expected to come from how the Chinese responded to the President Trump of signing these two bills regarding Hong Kong. Now they've said that they're going to be warning of firm countermeasures. Now exactly what that means, no one really knows yet. And at the moment, markets are fairly sort of reticent to take a view on that. The expectation is that the trade agreement that they're working towards, the phase one part of the agreement, is still on the table. They're still working towards that. Whether that agreement is potentially affected by this move from Donald Trump to sign that into law is not known yet. When the markets are not expecting it to be that much of a game changer. So unless China come out with a really significant response, I don't really think that it's going to be too much of a repricing. But at the moment, they're waiting for bond markets to really take a view, and they haven't really done that given the Thanksgiving holiday. Now, regarding data points today, we've got Eurozone flash HICP or flash inflation data at 10 o'clock. It's expected to tick a little bit higher, back to 0.9% on headline, 1.2% on core. I can show you that here. So 0.9% on headline would be a bit of a reversal, potentially. 1.2% on core would be back towards the top of basically where it's been for the past 5 or so years. So nothing decisive in terms of improvement, and we really need to see that traction higher for any real movement surrounding inflation expectations, and it's not happening at the moment. So that's that. This afternoon we've got Canadian GDP as well. Q3 GDP expected to be analysed at 1.2%, so watch a bit of action maybe on the Canadian dollar this afternoon. Now, my chart of the day is Australian dollar versus Japanese yen, Aussie yen. This uptrend in Aussie yen has been ongoing for the past few months, really, as risk appetite has gradually been improving, higher lows, higher highs. The retreat back towards the uptrend has found support in the last week and started to build again, but you've got this pivot line, around 74.30 to 74.50. Old support has become resistant at 74.30 and again 74.50. So it's a level that I think you need to see the market breaking out to really suggest that the bulls are back in control. Now 74.50, a close above that really would open up the highs. 75.65 again, 76.25 being that next key resistance from the early midsummer time. But I think there is an improvement still. You got the MACD lines, which are sort of unwound back towards neutral, ready to turn up. Stochastics already bull crossed and moved higher. RSI sort of back around the 50 mark, but looking to push higher. So it is a market that's building once more, and you can see here on the hourly chart, 74.30 initial resistance. Looked at that a couple of times and backed away, but there is a more positive configuration on the hourly RSI now, above 40 consistently, and above neutral on the hourly MACD. So that is suggesting little weakness is a chance to buy. Intraday weakness is a chance to buy. So back around 74 figure, initially supportive, maybe 73.95 area. Then below that, you're looking at 73, 75. So the market is progressively building this new run of high lows over the past few sessions and testing 74.30 initial resistance. Break above that, that would improve certainly, and 74.50, break above that, and you really are up in the bull run phase once more. So with that in mind, I wish you good luck in your trading. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.